The question on everyone's mind is whether this momentum will extend to other alternative cryptocurrencies, potentially leading to ETFs for Solana, NAIA, and Cardano. This development is too significant to overlook. Stay tuned as we navigate this bull market, ensuring you remain updated without missing a beat of the latest in cryptocurrency insights. Our commitment is to deliver content that enriches your understanding and keeps you informed daily. Join us, and let's explore the dynamic world of crypto together. The landscape of Ethereum ETFs is rapidly evolving. Just last week, a surprising update emerged. The SEC, after a prolonged period of inaction and silence, signaled a dramatic shift in stance. They reached out to applicants, requesting the submission of revised 19b4 forms, catching everyone from market analysts to investors off guard. The market's reaction was electric, with Ethereum's price experiencing a significant surge. In response, applicants swiftly updated their filings, and by the end of the week, the SEC was positioned to approve not one, but 5 Ethereum ETFs. However, it's not a done deal yet. The 19b4 forms are a crucial step, but the SEC's approval of the individual S1 registration statements is still pending. These statements are essential for any company looking to trade publicly, akin to an IPO. Interestingly, even insiders at the SEC were taken aback by this sudden change in direction, especially since the division responsible for reviewing the S1 applications hadn't anticipated such a move. Now they're scrambling to review and process these applications, a task that could require amendments and updates. According to industry analysts, this could extend the timeline by weeks or even months, depending on the complexity of the changes needed by the applicants. The journey towards the full market integration of Ethereum ETFs may be a lengthy one as the S1 applications process unfolds. Yet, this raises a crucial query. Upon commencement of trading, will there be a significant market demand? The situation presents a complex picture, similar to the earlier Bitcoin ETFs. These ETFs will enable a segment of investors, previously unable to purchase Ethereum directly, to invest within a regulated framework. This opens doors for major players such as hedge funds, mutual funds, and pension funds to acquire Ethereum exposure. Additionally, countless retail investors are eager to include Ethereum in their 401ks, seeking tax advantages. Eric Balunis, an analyst at Bloomberg for ETFs, anticipates a substantial inflow, projecting at least 15 to 20% of what Bitcoin ETFs attract to flow into Ethereum-based products. His peer, James Seyfried, mentioned in a recent podcast his expectation of a 20 to 25% inflow. Considering Ethereum's market capitalization is roughly a third of Bitcoin's, this could translate into considerable buying pressure for Ethereum. The optimism isn't isolated to these analysts. Joe Lubin has expressed expectations of a surge in demand for Ethereum once these products hit the market. Analysts at Bernstein Research share this sentiment, predicting a rally akin to what was observed following the Bitcoin ETF approvals. The Ethereum ETFs present a distinct scenario compared to their Bitcoin counterparts. For starters, the widespread expectation was for these Ethereum-based products to face rejection, which implies a potential delay in investment allocation from interested parties. It's important to remember that not long ago, Matt Hogan of Bitwise Asset Management expressed concerns that the market wasn't quite prepared for Ethereum ETFs, as it was still adjusting to the Bitcoin ETFs. He even suggested that a December timeline would be more suitable. Echoing this sentiment, Michael Anderson, co-founder of Framework Ventures, highlighted that the Ethereum ETF announcement caught many by surprise. Despite the Bitcoin ETFs paving the way for a structured approach to cryptocurrency ETFs for financial institutions and advisors, Anderson anticipates a rush among institutional players to educate their sales forces about Ethereum and to establish the necessary operational framework. To gauge potential demand for these financial products, we can look at existing market indicators. For instance, Ethereum-based exchange-traded funds, ETFs, specifically those tied to futures, have been available since October of the previous year. However, their market uptake has been less than enthusiastic. In terms of assets under management, AUM, these Ethereum futures ETFs lag significantly behind their Bitcoin counterparts. To illustrate, the AUM of the ProShares Ethereum Futures ETF stands at approximately $95 million, while the Bitcoin Futures ETF boasts an AUM exceeding $2.2 billion. This indicates that the demand for Ethereum futures is roughly 4% of that for Bitcoin. Moving beyond futures, spot ETFs offer a closer comparison. Hong Kong's recent introduction of ETFs for both Bitcoin and Ethereum provides insight, with Ethereum ETF inflows representing only about 15% of those for Bitcoin. Another metric for institutional interest is the trading volume of futures on regulated exchanges like the CME. While Bitcoin futures trading on the CME has reached the highest volumes compared to other exchanges, Ethereum futures trading on the CME is less, ranking fourth after several offshore and unregulated platforms. Investors also face the dilemma of opportunity costs when holding ETF shares instead of the underlying assets. The SEC's stance against Ethereum ETFs that include staking rewards forces investors to weigh the benefits of a potential 3.6% staking yield against the tax advantages and reduced risks associated with ETFs. While these benefits might outweigh the staking yield, investors must also consider the risks related to staking and custody. Thus, the decision isn't straightforward, and the assumption of equal value doesn't always apply in practice. A significant shift in the current scenario is the transformation of the regulatory landscape. The unexpected turnaround regarding Ethereum ETFs could likely be attributed to increased political influence. Remember, the approval of these ETFs coincided with the passage of the FUT-21 bill in the U.S. House, and just a week prior, the SAB 121A was also in the spotlight. These developments were discussed in our weekly news segment, which you can revisit for further details. It's noteworthy that former President Trump has expressed intentions to position the U.S. as a leading pro-cryptocurrency nation, and President Biden has ceased his veto warnings. This suggests a more favorable political atmosphere for cryptocurrencies compared to the period when Bitcoin ETFs were introduced. Furthermore, the SEC's green light for Ethereum spot ETFs complicates their argument against Ethereum being classified as a security. This change is partly why numerous projects within the Ethereum network saw a surge following the ETF announcements, lifting the uncertainty that previously overshadowed the ecosystem. This could set the stage for the much-anticipated shift from Bitcoin to Ethereum. As per Mike Novogratz, if the political winds in Washington have indeed turned, we can expect to see a significant rise in prices. Recent discussions about potential leading altcoins have prominently featured Solana, which has attracted considerable attention from institutional investors recently. Notably, investment figure Cathie Wood highlighted Solana on CNBC, and financial commentator Brian Kelly also suggested that Solana-based ETFs might be the next to surge in popularity. Additional insights were shared in a detailed tweet thread, which provides further analysis. Beyond the media spotlight, Solana has followed Bitcoin and Ethereum as the cryptocurrency with significant inflows into structured investment products, as reported by financial analytics firms in their regular market updates. It's not solely about the volume of assets under management, AUM. It's also the premium investors are prepared to pay above the AUM for these investment vehicles. To conclude this discussion, the approval of Ethereum ETFs is a positive signal for Ethereum and the broader cryptocurrency market. It's not just about the ability of institutions to engage in regulated trading, but the implications of such a drastic policy reversal for the entire sector. These ETFs are debuting at a time when the cryptocurrency domain is gaining increased validation, removing legal uncertainties that might deter widespread investment from both institutional and individual investors. There's anticipation that the Federal Reserve might ease its monetary policy in the third quarter, which could be the crucial factor needed to ignite a prolonged season of growth for altcoins. However, risks remain, such as the possibility that these ETFs might not attract the expected level of initial investment, a concern supported by some market data. It's also important to recognize that both institutional and individual investors may require time to become acquainted with Bitcoin products before they feel confident diversifying into other cryptocurrencies. This underscores the responsibility of those within the cryptocurrency community to articulate the investment rationale for Ethereum clearly. It's essential to explain why Ethereum should be included in a diversified portfolio and, crucially, how its investment proposition is distinct from Bitcoin's. Do you anticipate that ETF flows will exceed expectations, or is there a possibility they might fall short? Additionally, should the ETF receive approval, which alternative cryptocurrency do you think might be next in line for an ETF? Share your opinions in the comments section, and if you found this video enjoyable, show your support with a like and hit the subscribe button to stay updated with the latest cryptocurrency trends.